Hi, Jonathan York from IRG BOP. I'm looking at something a little bit different this week. With the global recovery now in full flow, many investors are contacting us now to see how they can access the resource and mining sector, predominantly obviously out of Australia, and see how they can access those to take advantage of the global recovery that's taking place out there. Obviously one way is just to buy one of the big miners, looking at BHP or Rio or Anglo American, something like that, traded out of London. The issue there is that the share price is obviously quite expensive, and you are putting all your eggs in one basket that that company does perform. One of the other options will be to buy one of the physical metals or oil contract or something like that. Again, the issue there is that there's certainly high volatility with the commodity market, and it can be expensive in terms of storage, etc. One of the other options is looking at the BlackRock World Mining shares traded out of London. This is the global index that is traded and managed through BlackRock, which is one of the premier investment houses in the world. BlackRock were asked by the US Federal Reserve to manage the assets of Bear Stearns during their collapse, and also American International Group, the big US insurer, and also Citigroup as well. So they have a huge experience of managing assets that can be complex, and do have a very good proven track record. So that's certainly one's option of accessing a slightly different asset class with some pretty interesting opportunities out there. Elsewhere, we've got Greece still bubbling away in the background. They've got a March 16th deadline to get their debt and packages sorted out. The EU at the moment seems to be making all the right noises, and the market seems to be of the opinion that there will be a deal sorted out before that date, and the markets have traded up accordingly on the back of that, which is obviously good news for global equity markets. In Australia yesterday we saw the RBA increase rates again for the fourth time out of the last 5 meetings. Their cash rate is now 4%. Bear in mind that in New Zealand we're still at 2.5. There's obviously quite a big interest rate differential now. We expect that to see further pressure on the currency. So again, those of you who are holding Australian shares out there and have been looking to exit, maybe an interesting time to call us to see what the opportunities are out there. Certainly Australia is in a pretty good position out there. They're looking at pretty much trend growth at the moment now of around 3.5% per annum. The manufacturing is the strongest for 2 years, and their company profits, we've seen a huge surge in the last 2 reporting seasons. You compare that with New Zealand, where the growth forecast is probably around 1 to 1.5, might just get up to 2 if you see a push towards the sort of second half of the year here. But we are lagging a little bit behind, and that interest rate differential now will start to be a little bit of a burden on the currency. So call us on 0800 867 323 just to make sure that your portfolio is set up to take advantage of any rate increases that will be coming here in New Zealand, probably around the June time now, or is protected against interest rate increases, because rates certainly will be increasing here in New Zealand. It's just a matter of when, not if. Risk statement available on request. Call us on 0800 867 323 or go to the website www.irgbop.co.nz. Lots of interesting articles and investment opportunities out there. Still got the MAN OMIP Eclipse 2010 running, an international manager there that has access to over 120 different markets. All growth, no income. Certainly a place for that in most, I think most people's growth portfolio. And look forward to speaking to you soon. Thank you.